Volatile day of trade ahead of monthly expiry. Nifty and Sensex see cuts of over 0.5%. The Nifty falls below 24,900. Broader markets outperform, however. The blue chips and mid-caps end in the green.
InterGlobe Aviation co-founder Rakesh Gangwal sells another 5.7% in Indigo Airlines parent for near 12,000 crore rupees. This is the sixth large chunk sold since 2022 via block deals and leaves him with under 8% in the carrier.
Rajiv Jain, chairman and CIO of GQG Partners, tells CNBC TV18 Prime that India is part of the solution in Trump's ambition to rewire global manufacturing. He remains bullish on India and recently added Bharti Airtel and HDFC Bank to his portfolio. Hello and welcome. You're watching us here on a fresh new edition of Markets Forward. This is your go-to show where we aim to get you all the key points to gear up for the next trading day while we recap today's trading day as well. I'm Mangla Malu, with me, Vinny Motiwala. Hi, Vinny. It was a day of consolidation. There was volatility. The mid-cap index did well, but we are meandering in this range of 24,800 at the lower level, 24,750 if you had to broaden it out, and at the upper level on the Nifty. As we cross that 25,100 mark, we see some supply. So it's that 250 point, 350 point band either side of 25,000 that we're seeing the markets consolidate.
Absolutely. And today, actually, we're snapping that two-day gaining streak. So I did think that maybe would that momentum sustain? But yes, it has not sustained today. As of now, what Nifty closed at 24,800. Like Mangal was mentioning, that range that we saw it in, mid and small cap, that's seen an outperformance. Like you can see, advance decline ratio also, we're seeing a bit in the favor of advances, but not much of an excitement there. Still managing to hold on to gains on that front. So mid cap, 0.1% of gain, small cap similarly 0.1% of gain. What didn't do well today was the IT pack as well as in terms of the FMCG. Those were the top sectoral losers that came in today's trading session. But yes, that's how the market setup is looking like. But in the next 20 odd minutes, we have an exciting lineup for you all. And what we have in store for you all today, we'll start the day with the top movers and shakers of the day with Hormas, who's there on the wall. Then we have a flurry of stake sales on D Street today. InterGlobe Aviation, that slipped after co-founder Rakesh Gangwal offloaded another 5.7% stake in the company. Shares of PG, Electroplast and Sagility were also in focus today. Stay tuned in as we bring you all the details and more on these individual stocks. Last but not the least, we'll delve into the key market events to watch out for in tomorrow's trading session. But first up, let's go across to Hormas, who's waiting by on the big wall to take us through the top stock movers of the day. Hormas.
A final few days where we talk about earnings reactions, and of course you can't not talk about them till they are ongoing, and TTK Prestige was one of those results that came in during market hours just before the close of trade. At one point the stock was down 8% but still recovered to end around 6% lower because of the net loss that it reported this quarter. Brainbees was another earnings reaction. Info Edge, the numbers were a miss on expectations as well. Blue Dart was an earnings reaction as well, and on the flip side, the good reaction that came in was Bayer Crop, ending as the top gainer on the Nifty 500 in today's trading session. There were a lot of other newsmakers as well. Sagility was one of them. The OFS starting today for the non-retail, a lower circuit for that stock. Electra Green Tech, despite the management clarification, ending 6.5% lower. GE Vernova building on to those gains that it saw in yesterday's trade. InterGlobe Aviation, of course, on account of the block deal, and RateGain, the accident of the day today after the disappointing FY26 guidance, ending 10% lower. Stocks that did well on the back of volumes, and ITI was one such mover today. Of course, does not have significant float in the market, but 10% higher on that stock. Minda Corp did well, as did AWL Agri, the erstwhile Adani Wilmar. And lastly, some of the other losers within the broader markets, considering the fact that the texture of the market was that, look at Sumitomo Chemicals ending 6% lower, GIC and Emcure after 3 days of real solid gains, seeing some bit of profit booking in today's trading session. Back to you guys.
Right, Hormas, thanks a lot for that. Let's welcome Bala of CashAchaos.com and Sudip Bandhyopadhyay, Group Chairman at Inditrade Capital as well. Sudip, let's start with InterGlobe Aviation. That's been, the story of the day. The Gangwals cashing out. If you could, give us a sense over a period of time, is this an opportunity for one to buy?
Well, I think, Indigo is uniquely positioned with not really any competition coming in the near future. Air India is getting its act together, but I think it will take some time. So they are in a unique position in aviation industry today, where they are commanding a leading market share. and fantastic route connectivity. Their problem with the old Pratt and Whitney engines also to an extent is getting resolved, and I think for the next at least short to medium term they're in a very, very strong wicket. Now the question is whether investors should buy or not. I'm a little careful about aviation industry. I think fortunes change very fast and very quick. ATF prices are at all-time low, and of course this is a great time with travel tourism picking up, but things can change very fast. And globally, aviation industry has been extremely volatile historically if you look back at history for the last 50, 100 years. So I'm careful at this kind of valuation where Indigo is currently quoting, but medium to short term, I think there is absolutely no problem in Indigo. But from a long-term investor's point of view, I think one needs to be a little careful at this valuation.
Bit careful at these valuations is what you're saying, but InterGlobe Aviation today saw a fall of around 2%, right? And this is, like we were mentioning before as well, co-founder Rakesh Gangwal sold around another 5.7% stake in the airline for nearly 12,000 crore rupees. Remember, this is the sixth large chunk sold since 2022 via block deals and leaves him with an under 8% stake in the company. Nimesh is joining in with us to give us details on this front. Nimesh, over to you.
Vinny, who says that aviation doesn't make you money, or for that matter, when the promoter sells, one should not buy? Gangwal has actually sold and actually proved the logic wrong in terms of not making money in aviation. So since 2022, the Gangwal family has consistently sold stake in InterGlobe, and they've managed to raise 40,000 crores, which is equivalent to $4.7 billion that they've raised by selling stakes in September of 2022. But that's not done yet. They still own 7.8% stake after today's block deal, which at the current price is valued at 16,000 crores. But do remember, there is a 150-day lockup for the promoters now. So for next 5 months, the Gangwal can't take further stake in InterGlobe. But if you look at the history of the stake sale, that's very fascinating. The first block deal started in September of 2022 when they started selling stake. A small stake that they sold in September 2022 and raised close to 2,400 crores. And the average price was 1927. That's the price at which the first time the Gangwal sold stake. After that, there was a 150-day lockup. So the next block happened in Feb 17 of 2023. That they sold at a marginal discount to the previous block. That is at 1882. That time they sold 4% stake and raised close to 3,000 crores. But after that, it's been a fascinating journey in terms of stake sale. The next block happened in 2023 of August. That's when they sold nearly 4% stake. And that price was 2454, a nearly 30% premium to the last block. And there they raised close to 4,300 crores. So that was in August of 2023. The next block happened after 150 days, which was in March of 2024. That is when the Gangwal family sold 5.8% stake. And that deal happened at 3242. Another 40% premium from the last block. And that is when they raised 7,000 crores. The next block happened in August of 2024. Another 5.8% stake sold. 10,000 crore is what they raised, and that went for 47.59 rupees per share. And finally, today's block that happened, wherein they sold 5.7% stake. This is today of 2025. 5.7% stake sold, almost 12,000 crores raised at a price of 50 to 50. So from a first block of 1850 to this block of 50 to 50, they've actually, it's been 85% higher than the first block, and consistently they've been selling stake. The good part is, while they've raised money for 40,000 crores, they're still sitting on equity worth 16,000 crores, which they can sell over the next 5 months after the lockup gets over.
Absolutely. This is really defying. You've mentioned it through the day as well, that who cannot make money in aviation. Clearly, he's proving it wrong right now. So that's very interesting. Thank you so much for that, Nimesh. But let's move on and talk about some of these other block deals that happened today as well. One is PG Electroplast is what we're talking about. Now, staying on that news, the promoter of PG Electroplast, they sold around 5.6% stake via block deals, raising 1,177 crore rupees. The floor price for the transaction was set at around 740 rupees per share. Now, following the sale, the promoters will hold a little over 49% in the company, and this remaining stake will be under a 180-day lock-in period. Meanwhile, Sagility, there's an offer for sale that happened over there. The stock fell 5%, over 5%, and hit lower circuit as well after its parent company is looking to sell stake in is looking to sell stake mainly via an OFS is what they're going through. It started today, so there is a 2-day period, 27 and 28, retail and non-retail investors. There's a follow-up offer also, 7% is for that what they'll be looking to sell, and there's an oversubscription of around 7% odd. So overall, it'll take it to 15%. The base price for that is around 38 rupees per share. This is mainly because they want to bring down their shareholding, which is around 80 odd percent right now, 82%, bring it down to the minimum public shareholding that they have of 75%, which is the norm. So that's what they would want to bring it down to, and that is why this OFS is going to be taking place. So Mangalam, we had a lot that's happening in block deals, OFS today as well.
Absolutely. As we come towards the end of the result season, post the silent period for all these promoters ends as well, then we see them pair their stake. But let's welcome Jay as well on the show. Jay, we've been talking fundamentals for a bit right now. What does promoters selling, resuming tell you about the mood of the overall market? What do you feel about the Nifty right now? I remember you turning bullish and everyone was very, very surprised. You still hold that, right?
Yeah, of course, Mangalam. The markets react in an endogenous way. They don't care about exogenous factors. And where the promoters sell and where the promoters buy are also a function of market psychology. And right now, particularly talking about Indigo, this might be not the case to like what it was before. It might be a case to follow the promoters now. The InterGlobe stock has completed a very important price structure from 1500 to 5600, possibly a significant top and correction potential for the stock to somewhere close to 3700, but pending confirmation. As far as the broader market goes, when Nifty goes, I think as long as Nifty can hold 24,462, and if it were to take out 25,116, there could be acceleration to the higher side, much to the surprise of a lot of participants, including me. I'm anticipating a short-term pullback to somewhere close to 23,825 or about 24,000 ballpark, and then go back to higher levels. From a 6 to 12 months perspective, I'm bullish on the markets. Anticipate Nifty to hit record highs to somewhere close to 29,000 mark.
All right, 29,000 mark by when?
From a 6 to 12 months perspective, time is always approximate. Take the price levels as the guideline. Time, keep it very, very approximate. I say 6, so from the end of year to middle of next year.
Take that point. Let's get chatting about another stock today. Even though the mid-cap index did well with the frontliners, taking a bit of a backseat, consolidating, we had one share which was falling, and that is Electra Green Tech. After the Maharashtra government has cancelled the company's electric bus order over missed delivery deadlines. Remember, this was one of the bigger movers from the lows and from the highs as well, has seen a correction of almost, 30-35%. Hormas joins in to tell us the entire story. Hormas.
Start off with the context first up, right? Late last evening, the Maharashtra's Transport Minister Pratap Sarnaik also wrote on his social media handle X that he has ordered officials to cancel the contract that was given to Electra Green Tech for 5150 electric buses that was supposed to be delivered to the MSRTC. And they had also, the tweet also mentioned that there was a revised timeline that was given to the company for delivering 1,000 buses by the 22nd of May. But no such delivery took place within that prescribed timeline, and as a result of which the company had announced that the minister had instructed officials to cancel the order. Now, Electra Green Tech had won the order back in July of 2023. That order was close to around 10,000 crore rupees, and there was in consortium with Trans Private Limited. Now, Trans was supposed to procure the buses from Electra and deliver it over a 24-month period, which is by July of 2025. And it had failed to do so. Now, the company had issued a clarification earlier this afternoon, and they mentioned that Trans is executing the contract in an SPV with Electra, and in this SPV, Electra has only 1% stake, and the rest is with Trans, which is 99%, and they have not received any such order, which is of cancellation of the order. They have not received any such order as of now. So the contract execution continues to remain in process, is what Electra Green Tech clarified earlier to the exchanges. But despite this, the stock ended 6.5% lower. It's been a big mover, but from the top that it made in February of 2024, the stock is down almost 45%.
Okay, Hormas, thank you so much for that. Important to keep an eye out on Electra Green Tech, I beg your pardon. Sudip, what's your view coming in on Electra Green Tech as well? Are there any fundamentals you're keeping an eye out on? At one point of time, viewers, investors really made a lot of profit on this one, and then that fall came in. Now these concerns come in around this front. Is that something one should really worry a lot more on that concern?
Well, Vinny, I think investors will have to be careful about what they're buying. When you're buying into these kind of emerging technology, companies, you have to be prepared for volatility and uncertainties. You make money somewhere, and maybe you will lose money somewhere when you're buying into these kind of new age technology companies. Now, we can't comment on the specifics of this, order cancellation and what kind of impact it will have on this SPV and consequently on Electra. But the fact remains that the timelines are not getting met, and government extending the timeline again and again, and in spite of that, things not happening does reflect poorly on the company, definitely. And we have to be careful and cognizant of these kind of issues which are emerging with a lot of these new age technology and manufacturing companies in particular. We have seen the situation as far as customer complaints are concerned in Ola Electric as well. There are innumerable customer complaints on these two-wheelers which Ola is producing. And now we are finding this Electra Green Tech's electric buses. There are challenges in delivery. So it's better to be careful. And that's what I would say. Definitely not recommend a buy at this stage because the valuation has come down.
What's your thesis on the overall EV theme? Do you think it's avoidable because the growth rate isn't as estimated earlier? And secondly, the ones which are growing also are facing these issues. Even globally, Tesla was overtaken by BYD. So would you back ICE right now if at all you had to have any exposure to the auto sector?
Mangalam, I've been talking about this for last 1.5 to 2 years, is that if I have to buy something, I will buy rather auto anch because ancillaries are completely flexible. They are catering to EV as well as ICE. And that is the best place to be in. And some of the auto ancillary companies, fortunately, Indian auto ancillary companies are integrated with the global OEMs. So that's the best place to be in. So you don't get into this debate vis-a-vis, EV vis-a-vis ICE. But having said that, definitely, EV is one segment where one has to be extremely careful because we are just seeing the trailer. You don't know who is going to. Let's look at four-wheelers. Now, everybody is producing or claiming to be producing. But when these things will come to the market, who will be the leader? God only can tell. No one can recommend that.
All right. When everyone is, selling gold, you go ahead and sell. Or when everyone is buying gold, you go ahead and sell shovels. That's the old saying.
Absolutely, Mangalam. But let's shift focus now to another stock that is in focus that was slipping in trade today, and that was RateGain. It fell as much as 10%, and this has come in after the company's FY26 guidance on both growth and margin was a disappointment. Rima is joining in with us to give us the details on this front. Rima.
Company's conference call was yesterday and they're guiding for a 6 to 8% revenue growth for FY26. This is sharply lower than the 12.5% growth that they had in the prior years. And before that, the company was growing at 50-60%. So this is the lowest revenue growth since FY21, its listing. Secondly, even the margin guidance, 15 to 17%, is a sharp drop off compared to the 21.5% margins that they had in the prior year. And the company said this is on account of increased marketing expenditure to expand into APAC and Middle East. Now, analysts believe what to watch will be any sort of M&A action. The company has been scouting for M&A. So far, they've held back, citing very high valuations. But now analysts believe that considering the growth is slowing down for the company and they have cash of 1290 crore rupees, perhaps an acquisition is going to be imminent. And that's going to be the next trigger to watch. Today, Phillip Capital has downgraded the stock to neutral. Back to you.
Right. Jay, do you like RateGain? Do you like any of the travel tech names?
Last time the stock came on my buy list was in May 2023, and the stock is still above that level. It had a terrific run from there on. But looking at the price structure, I would anticipate a final low come through below the April 7th low, or it could even clock a double bottom here. But the stock looks like it's got a final low to come through, and the record highs it saw about 800 plus mark, 875 and 800 mark. That's got one more higher high to come through in the medium to long term. So watch out for the next low. That might be an interesting low for an investor. That might be a mark of a significant reversal to come through for the medium term.
Okay, Jay, thank you so much for your view coming in there on RateGain. And Jay, as well as Sudip, thank you so much for joining in with us on the show as well today. But on that note, we're going to slip into a very short break. But before we go into the break, we'll leave you with the commentary from Rajiv Jain, chairman of GQG Partner, on his top picks. That's a CNBC TV18 Prime exclusive. Listen in.
Yes, so HDFC Bank, we thought was going through a sort of integration transition period as such between the two, HDFC and HDFC Bank. So since last September or thereabouts, last quarter last year till first quarter, we put almost $2 billion in HDFC Bank. And Bharti we started buying early last year, and then we have doubled down again this year. We've added a little bit to some of the other names too, nothing meaningful, but they're like a few $100 million here and there, nothing meaningful. So these are the two big positions, the other ones we quite like. I mean, you have public information on that. So because we're still very bullish on the utilities/infra type assets, we still like real estate. So and what's interesting, we feel this time around is that seems like, and for good reason, the rally seems to be led far more by large cap than mid cap. Mid cap are fine, but the valuation is less supported than a large cap, and large caps are now transitioning from, they've digested last few years for different reasons. And a couple other names, by the way, we just started, we recently initiated, so we were active, we can't talk about those. Again, large cap. So we feel that the large cap space looks fairly interesting, actually.
Okay. And the way the portfolio here in India is constructed, it's still, I mean, the thrust is still industrials, infrastructure. I mean, if you were to sort of look at it by weightage, would that be correct?
Yeah, so if you look at it, it's not exactly precise, but banks is a big exposure, as you know, with now 3, ICICI, HDFC, and State Bank of India, so all 3, they're pretty meaningful. And then you get the infrastructure/utilities, because one thing I found fascinating is that utilities globally tend to be defensive. For some reason, these stocks are less defensive. I mean, I don't know why, but they're less defensive in India, but they have far more predictable growth because the rollout is happening, and that's probably half of our book. When I say utilities, infra combined, and then you get then you get 2 staples. I mean, ITC and Patanjali,
right.
And then rest is sort of mixed match of some smaller positions.
Welcome back to Markets Forward on CNBC TV18. Now let's take a look at the key corporate voices we had on our shows today. First up is KC International. The management aims to generate around 1,500 crore rupees from their water business in FY26. Adds the miss in the full year revenue guidance was on account of delay in receivables from state government. Further, it expects margins to remain in the range of 8 to 8.5% this year.
We also had Afcons Infra. The revenue saw a significant decline due to geopolitical tensions. For second year in a row, the company missed its guidance, added that revenue growth will be in the range of 20 to 25% for FY26, while they are awaiting a near $2.5 billion order confirmation from the Dubai Municipality Corporation.
Last but not the least, Jyoti CNC, the management expects to maintain the growth trajectory in FY26 with margin guidance in the range of 25 to 27% and adds it will grow top line by 35 to 40% in FY26.
And with that, we've come to an end on this edition of Market Forward. But before we wrap, let's get you some key market events to watch out for. Vamakshi joins in with the details.
Well, Mangalam, the earnings season still continues. Thankfully, we're at the fag end of it, but we'll be keeping an eye out on a couple of counters that will be reporting numbers tomorrow. This list includes Cummins India, IRCTC, as well as SAIL. Apart from that, there's a new listing that will take place tomorrow. That is Belrise Industries. We'll be watching out for that one as well. Some stocks also go ex-dividend tomorrow. This includes, some FMCG names like ITC as well as Colgate. And lastly, as far as some economic cues are concerned, we'll be keeping an eye out on India's industrial production data. RBI will be auctioning nearly 19,000 crores in treasury bills. The FOMC meeting minutes will also be out tomorrow. And lastly, OPEC and non-OPEC ministerial meeting is also scheduled for tomorrow.
Okay, Mamakshi, thank you so much for that. But with that, we'll wrap up this edition of Markets Forward on CNBC TV18. Thank you so much for tuning in. Up next, you'll get more news and updates, so don't go anywhere. Thank you so much.